Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. Thank you very much for listening to this video today. And as usual, don't forget to like this video and subscribe to my channel. That will be really, really awesome. I'll appreciate that, guys. So in today's video, I'm going to be talking about what happened in the stock market last week. And I'm also going to be explaining a little bit more about some of the crypto developments as well, and really focusing on have we hit that peak fear level. So before I get started, I just want to say thank you very much for sticking with me and sticking with our portfolio. It's been a tough 2022 so far with what's happened in the stock market and what's happened in crypto as well. But I really appreciate you holding on throughout 2022, and I'm really optimistic about us turning things around in both our portfolio, in both stocks and crypto over the next couple of months. So it's very important that you stay very patient during these bear markets. So now over to our performance last week, and we were down, our portfolio was down about 2.24% for last week. If we compare that to the NASDAQ, that was down about 1.6%, and the S&P 500, which was down about 0.7%. The FTSE 100 was up about 0.92% for last week, and Bitcoin was slightly up at the time of measurement, although it's been down a little bit over the last 24 hours or so. And our portfolio slightly underperformed the benchmarks last week. I think that's because we have quite a lot of altcoins in crypto in our portfolio, and also some of the kind of technology-based stocks didn't do as well last week. However, it was quite a good week for Europe in general, and China had a slight bounce back as well, which took away some of that slack from the poor week in the US market. As I said, Bitcoin held quite firm last week, although we are near all-time lows. Although we are near cycle lows. And also I did a lot of short-term positions with success in oil, the US dollar, 𝘃_CHF, and also Gala and ZAR, which is South Africa, and the Japanese yen. And I also closed a long-term position in Wire at a 50% profit. This is a position that I got into. It was severely suffering a few months ago when I took this position in Wire, and I felt like it was really wildly undervalued. So I took a position in it, and several months later I'd managed to close at a 50% profit, and I felt like it was a good time to take profit off the table there. Also, if I look at 2022 as a whole and our benchmarks, our portfolio is down about 36.5%. If we compare that to the NASDAQ, which is down about 28.8%, and the S&P 500, which is down about 16.8%, and Bitcoin, which is down about 65.17% for 2022 so far. But if we look at that really, because I have quite a high proportion of Bitcoin and altcoins, some altcoins are down, 90 to 95% from the all-time highs. I think our portfolio is holding up pretty well considering, and that's because a lot of the techniques that I've been able to put in place, such as the short-term trades. I also increased the number of stocks in our portfolio, reduced our crypto weighting. After the good times in 2021, I took profits and then reduced our crypto weighting. And now I'm kind of doing the opposite as well, because I feel like we've either hit the bottom of crypto or we're at least very close, which I'll explain a little bit later. And I'm starting to increase those positions again. But really, if look at the benchmarks, although we're below the NASDAQ and the S&P 500, I do think that we have a lot more upside potential because of our crypto holdings than those other benchmarks, as was seen over the last couple of years in my results. If we look at the main news for last week, value stocks performed better than growth stocks as a whole. Last week, a lot of the growth stocks really kind of suffered. And there also was some tough earnings reports. One of those was Target. But however, there were some better earnings reports from Foot Locker, etc., which did go up in price last week. If we look at it as a whole, there's continued to be more layoff announcements, especially in the tech sector. And we've seen Amazon last week. They announced that they've cut roughly 10,000 job cuts throughout the organization. And this has been quite widespread in tech. But this is as to be expected in a tightening type of environment where interest rates are going up and they're trying to suppress demand, which in turn should reduce inflation. I think it's kind of going to plan from the Federal Reserve. So it's nothing kind of unexpected. And we are starting to see unemployment rise slightly, especially in the tech sector. We also saw the energy sector underperform last week, and that is because the European oil and natural gas inventories reached near peak levels. So there's a lot more storage of oil and natural gas, which had a negative effect on the price. We also saw the UK Finance Minister, Jeremy Hunt. He unveiled new tax increases and spending cuts and new fiscal rules, really, which are put in place to try to reduce some of that inflation and put some kind of tightening measures in and get more money as well to the government. Inflation in the UK has continued to accelerate. And it actually hit a 41-year high of 11.1%. And that is quite a big increase from the previous month of 10.1%. So as you can see, inflation still has not peaked in the UK. And as I mentioned, over several months, it's quite likely that inflation in European countries is going to peak later. And that is because for two reasons. One is because of the dependence that the UK and Europe has on gas and oil from Russia, and those increased oil prices that have been in place. And then the other thing is that they were a lot slower off the mark in terms of those interest rate rises. And although they have been doing more aggressive interest rate rises recently, it does take some time for those to be seen in the economy, and there is a lagging effect. If we look at the unemployment rate in the UK, it came in at 3.6% for the third quarter. So it is rising slightly. We also saw China has continued to actually put in ease COVID restrictions. And this is being weighed at the moment against kind of a rising caseload. So China over the last couple of weeks have showed an intention to try and reduce those COVID restrictions. But in turn, we are seeing rising cases in the country. So that is kind of putting a little bit of a dampening on it at the moment. But it's quite clear that the Chinese government cannot continue with their COVID zero policy for much longer without severely affecting their economy. So I expect that to ease over time. We also saw President Biden and the Chinese President Xi Jinping. They had a meeting last week in Indonesia for several hours, in which one of the subjects on the table was obviously to try and prevent escalation in terms of Cold War sentiment. Obviously, there's been a lot of talk about overtures that China have had about potentially invading Taiwan, how they're coordinating with Russia and the support of what's happening in Ukraine as well. So it looks like they had quite productive talks, which boosted sentiment. If we look at the top three performing stocks for last week, the top performing stock Unsurprisingly, was a Chinese tech stock called JD.com, and that was up about 14.59%. The second best performing stock in our portfolio last week was Alibaba, which is also up 13.72%, and we have had some good bounce back from Alibaba from the lows over the last couple of weeks, which has really helped us. It's a key stock within our portfolio, quite high weightage. And also the third best performing stock for last week was Flowserve, which was up about 7.78%. So as we move on to our 𝗃𝗶𝗀𝗃𝗀𝗀 charts edition, and really what I wanted to say by these two charts to the left and the right is that spending has continued to be quite buoyant over the last couple of months. Especially if they have increased those kind of interest rates. It means mortgages have gone up. There's been higher energy bills, etc. So you would expect that there had been quite a drop off in spending in the US. However, that hasn't been the case. And the chart to the left shows the US personal savings rate. So what really is happening is, although people aren't spending much less, they are being able to save much less. And if we look at the chart to the right as well, this kind of backs it up as well, because this is the US credit card balances and the year-on-year changes. And as we can see, there has been a rise in the use of credit cards and people going into debt to continue their level of spending. So that is expected to really drop off over the next couple of months. I'm expecting spending to reduce as those interest rates and the effect of those interest rates kick in over the next couple of months. If we look again at the US personal savings rate, we'll see that it's actually at its lowest level since 2008. One of the charts I just wanted to show you in front of you was really just to show you that there hasn't really been any safe assets in 2022. Everything has suffered across the board, as we have seen a real lack of liquidity in the markets and liquidity being drained from the markets, which have had the most effect on high growth companies or high growth assets or assets with a lot of speculation. And I think the only thing that's kind of come off unscathed this year has been commodities overall as a general sector. And that's kind of mainly been driven by oil and natural gas prices. But you can see that really the only thing that's kind of come out unscathed is commodities and holding cash in your portfolio. Even, gold and bonds, which have usually been the go-to during recessionary periods, haven't actually performed very well this year. However, you can see that in those periods, like if you look at some of the different asset classes, and when you see they've had a red year, so for example, if they've had a bad year any particular time, they usually do a lot better the year after a recession has been completed. As we move on now to the crypto news and views, and Bitcoin again has been a little bit up and down this week as we've seen the kind of more fallout from the FTX contagion, which I went over in the presentation just a couple of weeks ago. And we did actually see Bitcoin hit a 2-year low at about 15,500. We've continued to see that contagion from FTX, and it's seen that FTX actually owes around $3.1 billion to its top 50 creditors. So these are some of the kind of largest hedge funds in the business, and there's really not a lot of crypto-based companies that have gone completely unscathed. Also, a couple of weeks ago, there was, in addition to obviously the financial woes that FTX has had, there was a hack on FTX. and this did affect some of the remaining coins that they actually had in their possession. And the hacker has started to move those coins this week, and we've seen over 200 million ETH has been moved over 12 different wallets. It's quite likely that the hacker is trying to disguise the movement of those coins, and it makes it a lot harder if they're split over multiple wallets. And we'll probably see that those will be, put into crypto mixing tools to try and disguise and hide where the origin of those come from. So I expect there to be a little bit of selling pressure, especially on Ethereum over the next week or so. However, I do think we are at very attractive levels. We've also seen Genesis has denied its imminent plans to file for bankruptcy. It's another kind of lending service, and they halted withdrawals just over a week ago. And they have been trying to raise money in order to make sure that they don't go into bankruptcy. I think they approached Binance and they were rejected by Binance. So I think it's looking quite likely that they will go into bankruptcy, and there will be some more collateral damage from this FTX fallout. I don't necessarily think it's a bad thing, although it might be bad in the very short term. I think bear markets quite often weed out either the incompetent or the fraudulent players from the market. They kind of cleanse it. And then I think after they're cleansed out of the market, we should have some serious players in there who are looking to continue to build the crypto ecosystem. However, there could be some fallout in the short term. However, there are a lot of opportunists in the market, and we have seen 𝘃𝗶𝗀𝗀𝗀, who manages ARK Invest, has added more Bitcoin exposure through GBTC, and has continued to increase that Bitcoin exposure through GBTC. However, GBTC is now at a big discount from spot, and as you know, GBTC tried to convert to a ETF a few months ago, and it was rejected, and it's now operating at a discount. And I think 𝘃𝗶𝗀𝗀𝗀 thinks that there is a good arbitrage opportunity there. We also saw Coinbase stock hit new lows, which is another one of ARK Invest's holdings. There's also going to be a new algorithmic stablecoin on the Cardano network called DJED. And again, this is a very contentious subject because algorithmic stablecoins have been in the news a lot over 2022, and that is because Luna USDT was an algorithmic stablecoin. And this ran into trouble, and there's a lot of people in the market saying algorithmic stablecoins are obviously not backed by anything, and that there's a lot of design flaws potentially in them that could send them into a similar death spiral as a USDT. It's not actually known exactly how this new algorithmic stablecoin is going to be programmed and is going to be set up. However, it does cause some concern, and it's probably not something that I would trust my stable coin in and any other algorithmic stable coin until there's a lot more years evidence of proof. We also seen GBTC, again, Grayscale. They were asked to do a proof of reserves. Many of the crypto exchanges have done a proof of reserves. However, this was rejected by Grayscale. They said that they don't have any financial issues, and that the financial issues that were in place from the parent company doesn't affect Grayscale at all, or any of the funds in Grayscale. However, they didn't want to provide these proof of reserves due to privacy concerns. And it's very difficult to tell if that is just a way of cloaking the fact that they might not have these reserves in place in the first place, or legitimate privacy concerns. And I think that should be clear over the next couple of months as we see if there's further fallout from the FTX issues that have been in place. My overall views on the crypto market at the moment, and I have continued to add some crypto, especially some altcoins, to our portfolio. A lot of them are trading at 90 to 95% down from their all-time highs. And I think that this is a good opportunity while there is a maximum fear in the market to start to accumulate more altcoins. And that doesn't necessarily mean that we've completely hit the lows and that we're going to turn back immediately. But I think there are lots of altcoins at the moment which are asymmetric bets, which I think have a lot more upside than downside at these levels. And I think it's a good time to accumulate. I did a very similar thing in early 2019 after Bitcoin and crypto hit its bottoms of the last cycle, and it served me very well. And I think I will continue to do that in this cycle. However, I will keep a moderate amount of crypto exposure in our portfolio, and I will not overdo it, and I will not take undue risks. I really just wanted to show you these kind of two charts, and the main reason I want to show you these two charts is really contemplating whether we might have hit that cycle low, especially in Bitcoin. And the reason why I say that, and what you need to know in crypto and in the markets in general really, is that markets often rhyme. It doesn't mean that they repeat exactly the way that they have done in previous cycles, for example. So at the moment, we are about 364 days. It might be slightly outdated, this chart's probably 367, 368 days from the last Bitcoin all-time high at 68,991. And if we look at previous bear markets, and in particular, I want to look at where we were in the last cycle around this time, it actually went from the top to the bottom of the last cycle from the end of 2017 to the end of 2018. It was actually 363 days. So we have actually surpassed now the period of the bear market in the last cycle. It doesn't necessarily mean we are completely there yet. There is a lot of different dynamics in this market. As I said, there's a lot of tightening in place. We're currently in a recession, so it doesn't mean we are exactly at the bottom. But I like to look at these cycles really as a real good base case, because Bitcoin is quite unique because of this 4-year cycle, and the next halving cycle for Bitcoin is in roughly about May 2024. So these cycles do tend to play out quite similar each time. However, if we take another viewpoint, if we look at the previous bear market beyond that last bear market for Bitcoin, so the 2013 to 2015 bear market, that was about 410 days. So if we were on about 367 days, there would still be a little bit of a way to go if we mimic the previous cycle in 2013 to 2015. But I think it's very clear that we are very close, if not have already hit the bottom for Bitcoin in this cycle. We're at about 77% decline. The previous bear cycle was about 84%, and then the cycle before that was 85%. And I believe myself in these diminishing returns. That means that the upside every cycle is slightly lower than the cycle before, as we saw in the last highs of the Bitcoin cycle. But that also means that the drawdowns in each cycle from high to low should become lower. So if we're at about 77%, maybe we bottom here, or maybe we bottom at 80%. But I expect that we are quite close to bottoming if we haven't already. So that's my video today. Thank you very much for listening to this video. And as usual, guys, if you haven't joined our Discord group and you want to have a discussion with a very like-minded group of fellow investors, or you want to ask me any questions, I'm very regularly interacting in there, you can do on my Discord group, and the invitation is below in this description. So until then, have a great week ahead. And if you're watching the World Cup, please enjoy it. Come on, England.